Can you get a U.S. mortgage if you live outside the United States? In many cases, yes. There are mortgage programs specifically designed for international buyers who don't fit traditional U.S. mortgage guidelines. And the qualification process can vary differently from a conventional mortgage. So let's look at who these programs are designed for, what types of U.S. properties you can finance, how much money you need down, how foreign income and assets can be documented, and how investment properties can qualify using rental income. So what is a foreign national home loan? A foreign national home loan is generally a non-QM or non-qualified mortgage loan product designed for someone who is not a U.S. citizen or a permanent resident, primarily lives outside the United States, typically earns income outside the United States, and wants to finance property in the United States. These borrowers may not have things commonly used in traditional mortgage underwriting, such as a U.S. Social Security number, U.S. tax returns, or an established U.S. credit history. Foreign national programs provide alternative ways to evaluate that borrower. So what type of properties can you finance with this kind of a mortgage? Depending upon the program, foreign national financing may be available for second homes, vacation homes, or an investment property. A primary residence is generally excluded from the foreign national programs we're not discussing. Eligible properties types may include single-family homes, condos, townhomes, planned unit development or PUDs, duplexes, triplexes, four-unit properties. Certain programs may also allow non-warrantable condos, condotels, and in some cases short-term rental properties also. So both the property use and the property type need to fit the program guidelines overall. So how much money do you need to put down on a foreign national mortgage? As little as 20% down. The actual requirements can depend upon the property use, the qualification method, the property type, the loan amount, available assets, and the overall strength of the transaction. But being an international buyer does not automatically mean you have to pay cash or make an unusually large down payment. So 20% down in most cases will be suffice on a mortgage loan for a foreign national program. How can you qualify? This is where foreign national lending becomes particularly interesting. There isn't just one way to document your ability to repay this mortgage. Different programs may provide different options. The first option, foreign income. For a borrower purchasing a second or vacation home in the U.S., traditional income qualifications may be available using foreign income. Depending upon the program, the lender may review employment income, business income, foreign financial statements, and supporting income documentation. The goal is to verify the borrower's ability to repay without required U.S. employment. Option 2, bank statements. For self-employed borrower or international business owner, some programs may allow 12 or 24 months of bank statements. These include either your personal bank account or business bank account, or a combination of both in some situations, depending upon the program. The lender can evaluate recurring deposits and cash flow instead of relying exclusively on traditional tax return income. Another method of income documentation is a profit and loss statement, a profit and loss documentation. For someone who owns a business, a profit and loss statement can provide another way to demonstrate business revenue, expenses, and profitability. Depending upon the program, an accountant, CPA, or other qualified professional may need to prepare or verify that information. Option 4 for income documentation, asset-based qualification. Instead of relying entirely on a monthly earned income, eligible liquid assets can be evaluated as part of determining the borrower's ability to qualify. Depending upon the actual mortgage program itself, that may include cash, savings, brokerage accounts, investment accounts, and other eligible liquid assets. This can be useful when someone's financial strength is primarily reflected in their assets rather than their traditional monthly income. If the foreign national borrower is wanting to purchase an investment property, for instance, another income documentation way of showing income is or another income documentation way of qualifying for the mortgage itself is a DSCR financing, which is debt service coverage ratio financing. With this type of loan, the lender focuses primarily on the property's qualifying rental income. Rather than requiring the borrowers to qualify from personal employment income, some current foreign national DSCR programs may allow qualifications beginning around a 1.0 debt service coverage ratio. DSCR is specifically relevant to income-producing investment properties, not a second home or a vacation home that's used for personal use. For an international real estate investor, this can provide a much simpler path to financing a U.S. rental property. As long as basically as long as the rent taken in covers the mortgage payment, the principal, interest, taxes, and insurance, and if there's an HOA, like the 1.0 ratio I just mentioned, as long as that rental income on a monthly basis covers your monthly mortgage payment, that borrower may qualify for a debt service coverage ratio loan. So what about U.S. credit? A lack of traditional U.S. credit does not automatically prevent a foreign national from qualifying. Some programs do not require a U.S. FICO score, for instance. Depending upon the program, creditworthiness may instead be evaluated using such things such as an international credit report, foreign bank references, credit reference letters, housing payment history, or certain credit references requirements may be waived altogether. So the lender has other ways of evaluating the borrower's financial history. What identification and foreign documents are required? You should generally expect to provide a valid, unexpired passport. Additional visa or entry documentation may or may not be required depending upon the program itself. Additional, or if financial records are written in another language, documents such as bank statements, bank records, financial statements, credit documents, or accountant letters may require certified English translations. Financial information may also need to be converted into U.S. dollars for underwriting purposes. Getting those documents organized early can prevent delays later in the loan process. How are foreign assets handled? Your down payment, your closing costs, and other available assets may be held outside the U.S. Foreign national programs handle those funds differently. Some programs allow verified foreign assets to remain overseas, and even may be permitted may permit closing funds to be wired, for that matter. Yeah, so these funds may be wired directly from an international bank to the U.S. closing agent. Other programs may require money to be transferred into a U.S. financial institute before closing. There can also be different requirements for documentation, the source of the funds, large deposits, account ownership, and currency conversions. So before moving substantial amounts of money, find out exactly what the program requires beforehand. What about reserves? In addition to the money needed to close, foreign national programs may require reserves. These are liquid assets remain available after closing. Depending upon the program itself, the requirement itself may require anywhere from 6 to 12 months of mortgage payment. Reserves of the property's required housing expenses. The exact amount can depend upon the loan size, the property type, qualification method, and overall transaction itself. The exact amount, this is important because having enough money for the down payment and closing costs does not necessarily mean you have enough money to qualify for the asset itself, because you got to make sure you have those reserves. Each loan program is different. It's either 6 or 12 months generally. Can you purchase a property through an LLC? For an investment property, some foreign national programs allow ownership through an U.S. LLC. This can be useful for international investors building a U.S. real estate portfolio. However, how you hold title can create legal considerations, tax considerations, and estate planning considerations to be aware of. So ownership structure should be reviewed with the appropriate legal and tax professionals. Are there additional compliance requirements? Yes. Foreign national transactions involve additional identity and compliance screening. They may include checks involving OFAC, or the Office of Foreign Assets Control, along with anti-money laundering and identification verification requirements. Certain sanctioned individuals, entities, countries, or jurisdictions may be restricted. For that reason, citizenship and country of residence should be reviewed early in the process for verification to make sure that none of those countries are sanctioned or restricted. How much money can you borrow on a foreign national mortgage loan? For a foreign national outside the U.S. looking to buy an investment property, second home, or a vacation property. Foreign national financing isn't just limited to smaller transactions. Some current programs may offer loan amounts up to $3 million. The maximum available loan will depend upon the borrower, the property type, the documentation, and the program itself. So the bottom line, if you live outside the United States, not having traditional U.S. income, credit, or financial documentation does not automatically mean you have to pay cash for a U.S. real estate property. Foreign national home loans are designed specifically to evaluate international borrowers differently. The important part is determining how the property will be used, how you're going to qualify as far as income documentation, and which program best fits the transaction. So I'm Jim Kennedy with Kennedy Mortgage. If you live outside the U.S. and you're considering purchasing or refinancing a U.S. property, specifically in Texas, feel free to reach out. We can look at your situation and determine which foreign national home loan programs may be available and the best one that fits your situation.